In this video, we're talking about bond yields, aka interest rates. Okay, these are the yields on a long-term basis, basically since 1150 AD, right? 1150 AD. So obviously they've joined on Venice, Holland, England, US to date. And my view has changed. It has changed in a way that has to take I have to make assumptions about what happened before 1150 AD. And this is problematic, and I'll explain that to you in a moment. But for now, I just want you to understand that this makes a hell of a lot more sense than my previous interpretation. So I've taken a long time to actually put this out. It's because I go through this process of sifting and sorting, and it happens behind the scenes now. I don't even look at a chart much until I do finally apply the chart, and then things just seem to stick out like a sore thumb, basically. Like if you look at this thing without seeing what happened before 1150 AD, you can only assume that whatever happened in 1150 AD down to 1344, right here, right, let me highlight this for you if I can, right, started here, ended here. I can only assume that's a wave C of an A, zigzag, right? Now, this is part of the thing that is presenting a problem. I'll get to that in a sec. The rest of it looks pretty good. You've got a zigzag wave B. You've got a 5-wave move down for wave C with alternation between waves 2 and 4, obviously. Look at that. Look at this. Look at all this. Right? Like that's some alternation there. Is that a weak 5-wave move right there? Is it similar in length to wave 1? It looks like it, right? Um, yeah, at this point, that right there is a C wave, a complete C wave that went for quite a while, right? Let me get rid of this stuff now for a sec. So what does that mean? It means that we had a wave D that went up from 1941 to 1981, a zigzag that was a 20-year move. That's why we had this move down since 1981 to 2020, right? It was a weak wave E 5-wave move, right? So what does that mean? It means that price has to go above all the previous corrective patterns to make a new high. Yes, that does mean 20% interest rates. It does. In fact, it could be more than that. Why? Well, this is the reason why I mentioned before. I'm going to explain to you why this is a problem. It's because we don't have where wave A started from. We don't have that. It could have been a really deep pullback for wave C, but where did wave A start? We don't have that data on this chart. So therefore, we can't know exactly how high it started from because that's the point it has to go above. It's a rule that cannot be broken. With this particular interpretation, we have to go above 20%, has to go above 20%. I would say somewhere between 25 to 30%, right? I have to say that because it's a logarithmic chart, uh, and I don't think we've seen the worst of it. And the problem with that is that we have record debt. Record debt. This is a problem, right? Now, let me get rid of this chart. Now, you understand that wave B ended in 2020, which is not on this chart, but it's down here somewhere, right? Since then, we've seen record increase in interest rates, which I predicted, but with a different count. Regardless of that, I still predicted it. But the problem is that I've changed my view on this wave a few times, probably 2 times, right? Originally thought it was a 5 wave move, and then I changed it. Sorry, I thought it was a 3 wave move, or maybe even a 5 wave move, a 3 wave move. Now I'm saying it's a 5 wave move, right? And I've marked out clearly why. I think that is wave one up the top there, wave three in the middle, and wave five was, the COVID wave or the 2018 down to 2020 wave. No rules broken, a lot of chop, a lot of crazy wave corrective patterns like for wave two and wave four, but they're there, right? And it's a weak 5 wave move, so there is overlap between wave four and wave two, and that's fine. There's no rule broken there. It was still a very choppy, weak 5 wave move that ended with a bang. Now, if you think that this has stopped running its course, I think you're wrong. Um, this is an impulsive move compared to what we've seen previously. This is insanely sharp. This is very sharp, this move. Like, you need to put that into perspective here. Go back for a second, right? If you remember the chart I just showed you before, look at this, the end of the D wave that's on the data on this chart. That looks nothing compared to what we're seeing now. That's nothing. Look how many years the end of that took, right? So we've got here basically almost 7,000 days just on that data, but it was obviously started lower, right? It would have been down a bit lower, but this is a zigzag D, right? The point I'm trying to make here is 1963 to 19, that's 20 years to get what? 300%. We did over 1,000% in 3 years. This is an impulsive move we're seeing, right? The, not many times in history have we seen this type of thing. Okay, and we're seeing it now with record debt in the system. This is a bond market crash of epic proportions, basically, right? Because obviously the bond market is inverted to the yields. Yields go up, bond prices go down, right? So, okay, so where are we in the pattern? Okay, so this is the interesting part here. Now, I'm going to kind of attempt to give you my view at a shorter term view here. So I'm going to go start off probably with the daily. Now, here I've got it marked out as wave 1, 2, 3, right? So look, at this point in time, it's hard to say like how much higher will this go? Will it hit 20%, 25%? How much is 25%? 20 to 30%. It's not even that much on this chart, right? I've got the log scale turned on, right? What is 30%? 30% is only around there. So we only have, okay, so we have this much room. So how much, okay, let's measure what we've currently seen up until this point, right? And then take the length of that and put it up again from the top of it, right? So look, it's not too far away. Okay, it's not too far away. The point I'm trying to make here is this a 1-2-1-2 subdivision? Or is this really just 1-2-3-4 expansion underway, right? Because 4 can expand and then we get a massive 5, bond crash 5, right? What is going on, right? What is going to cause that? What is going to cause that much of a crash? And that's the thing that I want to talk about if I can get there. So at the moment, what is this pattern down here? So we've got 1, 2, 3, uh, or 1 2 1 2. So okay, so what's happening at the highs here? Can I explain that? So what I believe is happening at the highs, simply put, is, well, wave 3 ended down here, basically. Okay, so we have a 3-wave move here. Okay, we have a corrective pattern, and we have another move up. Now that doesn't seem right, does it? 1 2 3 4 5. That's probably just a wave 3 right there. So cancel that. It doesn't look right. But corrective patterns are just that, corrective patterns. So this is wave 4 of wave 3, because the same patterns occur within a wave 2, 4, B of a zigzag, right? B in brackets. So pick your pattern, right? Pick your position of the pattern is what I'm trying to say. Where is the corrective pattern? Well, it can be in any of those waves. So which wave is it in? Is it in the wave you're looking at, etc.? That's the point I'm trying to make. The alternative is that, because these are sharp moves. This could be A, B, C, D, E, but once again, doesn't make sense. Why doesn't it make sense? Well, the problem is that if this was any kind of A, the C is too short, right? That would most likely be the end of a 3, a 4, and a 5 for 3. So wave 3 probably ended there. So what we're seeing now is probably the start of wave 4. So probably going to see some consolidation happen for a little while. Now wave 2 was expanded. A, B, C, D, E, expanded wave 2, but it came down back below the end of wave 1, which is basically a type 1 correction, which means it expanded, but it still came back down. A type 2 correction means it would have expanded, but ended above the end of wave 1 or the previous impulsive move, right? Remember, this is not Elliott wave, it's Arias wave. Then we got a wave 3. So I think wave 3 is done, right? It looks like it. It makes a lot of sense, right? Wave 5 is tad smaller than wave 1, in my opinion. But if we see any more subdivisions here, that just simply means that wave 3 is not done, right? It just simply means that wave 3 has probably got a bit further to go after some consolidation. The point is, this thing's not going to stop just yet. That's my point. And then what about wave 4? Is that going to be expanded? Is that going to be a type 2 expansion? Because this whole thing is impulsive, right? And impulsive moves tend to expand the corrections more and more as they progress. That's why they're impulsive, right? Because corrections don't just come back all the way back down before they go all the way back up. Usually they just really get like short. They're not deep corrections. They're shallow, and they just continue to grind higher, right? Grind high. Just because this is not Bitcoin doesn't mean it can't move, right? It's a pattern. It's based on human psychology, right? This is what the waves are, and it's a pattern that just moves. So, are you tracking the pattern? Are you understanding the pattern? Right? It's important because it's basically the entire debt market. The point I'm trying to make here, you know, behind the scenes, is that it doesn't matter how this really unfolds. The objective is 20% minimum, 25 to 30% minimum. We don't know. It could actually go higher than that. I would dare say that it will probably go in that range, right? Somewhere in that range, because like I said to you before, we don't know where that previous move started from. So we just can't know how high this has to go, because it has to go above every previous corrective wave. It's a rule. That rule will not be broken. If this count is correct, That has to happen. This has to go above 20% minimum. 30%, I can't say that's the maximum. I can say that there's a range. So 20 to 30% interest rates is coming, and I believe it's going to break the market. It's going to cause a lot of problem because we live in a world where everyone is very leveraged, right? We have regular people with $1 million loans, right? And if they have 20% interest rate on that $1 million loan, could you imagine the kind of pain that would inflict on people when we live in a time where we have record low income, household income is at record lows, right? This is a recipe for absolute disaster. You thought it was a problem back then when, um, what's his name? I forget his name now. The guy who owns the hedge fund, um, the Waterhouse hedge fund. I can't remember. It's on the tip of my tongue now. My God, why does this happen? Ray Dalio, right? Ray Dalio predicted back in the 80s that we would go into a massive depression. I think that's what he was saying, right? Massive depression. I think that they were a bit early, but I think the pattern, because a lot of people use Elliott wave, I think a lot of people thought that that was going to happen back then, right? But I think that that is going to happen this time around. But this is the time when no one believes it. Back then, you could have believed it, but it never happened. Now, I think it's the opposite. I think we're in a time where now people just can't believe it. They couldn't fathom that type of thing happening because it would be way too painful. But the thing is, people unfortunately become complacent. So, therefore, what do you expect from the herd, the crowd, right? This is all crowd psychology. What do you expect? Now, this pattern is incomplete. I would love to track it some more, and I might even get into some smaller degree uh, tracking of it down the road. But like for me, I at the moment I'm just renewing a lot of my ideas. This one's taken up a lot of your time, but if you really want to understand the mechanics behind what I do in terms of RES wave, well, this one kind of sums it up pretty well. You can't break these rules, right? Now, these are the things that can help you trade at small degrees, right? And once you get onto those moves, they go, 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 and they hit a target. And that's the whole point. You have a target, you hit it, take profit. But this particular view here could actually help you see, it could actually signify like a lot of things. And it could also literally prepare you for a lot of big opportunities ahead. So hopefully this hasn't drained you to the point of no return, but yeah, hopefully you found it interesting and informative. Thanks for watching.